Let me ask you a question. If there was one video you could watch that would tell you exactly the skills you need to be a successful investment banker, would you watch it? Well, there is, and I wish that I had been able to watch this video when I was starting out aged 26 in 1988. Where was YouTube then when I needed it? Today I'm going to explain to you the 8 key skill sets you need to master to be successful in investment banking today. Now, these include technical, soft skills, knowledge areas, mathematics, legal, modelling, strategy, and MBA skills. These are the skills that took me to a 6-figure salary and 6-figure bonuses in just 8 years working in corporate finance and then in international mergers and acquisitions in the 1990s. But I warn you, this is going to be a detailed list of skills and explanations that you will want to take notes on and watch repeatedly. You have been warned. Now, if you make it to the end, and many will fall by the wayside, not only will you prove how serious you are about succeeding in a really tough job, yes, persistence is one of the skills, but then I will share with you the most important skill that I did not know then, and more than anything, I wish that I had. And money cannot buy this experience. Believe me. Right, we've got a lot to cover, so let's get going. I'm going to start with technical skills. Now, whether you're just starting out or you're building on a strong foundation, these are the essential technical skills that will carry you through your career in banking. Let's break them down one by one. First up is financial analysis. As an investment banker, understanding financial statements is non-negotiable. You need to know how to dissect a company's income statement, balance sheet, and cash flow statement. And this isn't just about looking at numbers. You have to grasp the underlying story, what those numbers tell you about the health of the business. You'll be examining ratios like profitability, liquidity, and solvency to get a sense of the company's financial standing. And don't forget about accrual accounting and EBITDA adjustments. These allow you to smooth out the financial data and provide a more accurate view of a company's true performance. Next, let's talk about valuation techniques. Valuing a company is one of the core responsibilities of an investment banker. You'll be using a range of methods here. Discounted cash flow is the big one, but you'll also rely heavily on comparable company analysis and precedent transactions. These methods help you figure out what a company is worth based on its future cash flows, or by comparing it to others in the industry. And then there's the sum of the parts, SOTP method, which comes into play when you're dealing with conglomerates or companies that have multiple business lines. For those of you working with private equity or M&A deals, understanding how to model a leverage buyout is also crucial. Speaking of M&A, this is where things really get exciting. As a senior banker, you're not just analysing numbers, you're structuring deals. You'll be advising clients on how to merge with or acquire other businesses. You need to think about synergies, which are the potential savings or revenue gains from combining two companies. But M&A is as much about negotiation as it is about numbers. You'll be performing accretion and dilution analysis to ensure that the deal makes financial sense, especially for publicly traded companies where shareholder value is paramount. Let's move on to capital markets. If you're advising companies on raising capital, you need to be fluent in equity, debt, and hybrid instruments. Initial public offerings, secondary offerings, and bond issuance are some of the key areas where your expertise will be required. But it's not just about the product itself. You have to understand the timing, market conditions, and how investors are likely to react to these offerings. You'll also need to know about hybrid instruments such as convertible bonds, which combine features of both debt and equity. Now, no discussion of technical skills in banking would be complete without talking about Excel. And I'm not just talking about basic spreadsheets here. You'll need to be an Excel wizard. That means building complex financial models that can handle dynamic inputs and provide clear outputs for decision making. This includes everything from cash flow forecasting to sensitivity analysis. You should also be comfortable with VBA macros for automating repetitive tasks and making your models more efficient. Bloomberg Terminal and market software are the key tools of the trade. In investment banking, you'll rely heavily on Bloomberg, Reuters, Icon and FactSet, amongst other platforms. These tools provide real-time financial data, news and analytics that are crucial for making informed decisions. Learning to navigate them efficiently will save you time and help you stay ahead of market trends. And finally, let's not overlook presentation skills. Yes, I know, PowerPoint is part of your technical toolkit too. Creating pitch books and presentations is a big part of the job, especially when you're pitching to clients or representing investment ideas internally. Senior bankers are expected to build sophisticated, visually appealing slides that tell a compelling story. The ability to distill complex financial data into simple, digestible slides is an invaluable skill. So there you have it. These are the core technical skills every senior investment banker must master. Whether you're structuring deals, analysing financial statements, or presenting your findings to clients, these skills are the foundations of a successful career in banking. Now, we're going to expand on a lot of these areas as we go through this video, and I've got 7 more areas to go into. But in the next section, we're going to dive into the softer skills that complement this technical expertise, such as leadership, communication, and negotiation. Are you ready? Okay, let's press on. So now we come to soft skills. We've just covered technical skills, but while technical expertise is crucial, soft skills are what truly differentiate top bankers from the rest. These are the skills that will help you manage relationships, lead teams, and ultimately make your career sustainable in the long run. Let's dive into the key soft skills that every senior investment banker must master. First up, leadership. In a senior role, you're not just responsible for your own work. You're responsible for leading and developing a team. It's not just about managing people, it's about inspiring them to perform at their best. You'll need to delegate effectively, giving your team the autonomy to handle tasks while still overseeing the big picture. Mentoring is another key part of leadership. As a senior banker, you'll need to coach junior staff, helping them to develop the technical skills and, of course, the confidence they need to grow. Good leadership also means managing the dynamics of cross-functional teams, often under pressure. When you're working on a deal, you might have lawyers, accountants, and analysts all looking to you for direction. The ability to keep everyone aligned and motivated is essential. Next, let's talk about client relationships. Investment banking is a relationship-driven business. Your success depends not only on your financial acumen, but also on your ability to build and maintain trust with clients over time. As a senior banker, you're expected to cultivate deep relationships with CEOs, CFOs, and board members. You need to understand their business, their personal objectives, and how your services can help them achieve those goals. Being a trusted advisor means being proactive, anticipating their needs before they even ask. Over time, you'll become the go-to person when clients are making key financial decisions, whether it's raising capital, selling their business, or making strategic acquisitions. Now, negotiation and persuasion are at the heart of many investment banking deals, especially in M&A. Whether you're negotiating with other bankers, your clients, or regulatory bodies, you need to strike a balance between assertiveness and diplomacy. A successful negotiation isn't about getting everything you want. It's about finding a solution where all parties walk away feeling like they've won. Persuasion is equally important. You'll often need to convince stakeholders to see things your way, whether it's your client, your team, or even the firm's senior leadership. It's not enough to be right. You have to get others to buy into your vision as well. Now, let's talk about communication. Clear, concise, and effective communication, just like this, is absolutely essential. Whether you're delivering a pitch to a client, explaining a deal's complexities to a colleague, or presenting to a board, you'll need to be able to distill complex financial concepts into simple, actionable insights. Remember, not everyone you speak to is a financial expert, so part of your job is translating those complex details into something meaningful for your audience. And it's not just about talking. Listening is equally important. You need to fully understand client needs, concerns from your team, and feedback from stakeholders. Strong communicators don't just speak well, they listen well too. Another critical soft skill is emotional intelligence, or EQ. Frankly, not something I learned in the army. In investment banking, you'll deal with high-pressure situations, sensitive negotiations, and complex personalities. Being able to read the room, manage your own emotions, and respond empathetically to others is key. Whether it's dealing with an anxious client or smoothing over tension within your team, emotional intelligence will help you navigate tricky situations. It also helps in building rapport and trust with clients and colleagues alike. Banking is a high-stakes, high-stress environment, and EQ helps keep relationships on solid ground, even when things get tough. Now let's face it, investment banking is notorious for long hours and tight deadlines. That is why time management is so crucial. As a senior banker, you're often juggling multiple deals at different stages, while also handling key team management and client meetings. Prioritizing is the key to keeping everything on track. You'll need to be able to decide which tasks you need your immediate attention and which can be delegated. Managing time well also means recognizing when you need to step back and recharge. Burnout is real in this industry, and it's important to pace yourself for the long term. So those are the soft skills that every senior investment banker needs to master. These skills, leadership, client management, negotiation, communication, emotional intelligence, and time management, are what will allow you to thrive in a demanding and competitive field. Mastering these will not only make you more effective at your job, but they'll also help you build lasting relationships and a strong reputation within the industry. In the next section, we're going to move on to the knowledge areas you'll need to be familiar with to excel as a senior banker. Okay, now we're going to look at knowledge areas. We're going to consider the knowledge areas that every senior investment banker needs to have mastered. While technical skills and soft skills are crucial, you also need a broad and deep understanding of various sectors and market dynamics. From economics to industry-specific insights, this knowledge will allow you to provide informed advice to clients and make strategic decisions. Let's dive in. First, let's talk about economics, both macro and micro. As a senior banker, you'll need a strong grasp of how economic factors impact markets and businesses. On the macroeconomic side, this means understanding indicators like interest rates, inflation, GDP growth, and how central bank policies affect the broader market. You'll need to know how these factors influence everything from stock market performance to corporate profitability and capital raising. Then there's microeconomics, which focuses on individual business decisions like pricing strategies, cost structures, and consumer behavior. Understanding these dynamics is key when you're advising clients on how to navigate both short-term market fluctuations and long-term trends. Now, industry-specific knowledge is equally important. As a senior investment banker, you'll often focus on one or two sectors. I was focusing in technology and in particular for a while on IT services. Whether it's technology, healthcare, energy, or financial services, each sector has its own key drivers and risks, and you need to understand these in detail. For example, in the tech sector, innovation and scalability are critical, while in healthcare, regulatory issues and patent timelines are major concerns. If you're working in energy, you need to follow oil prices, sustainability trends, and geopolitical risks. Knowing your sector inside out will help you anticipate client needs and provide tailored advice that sets you apart from competitors. Risk management is another area of essential knowledge. Every deal or investment comes with inherent risks, whether they're financial, operational, or market related. As a senior banker, your job is to help clients identify and mitigate those risks. You need to understand how to manage credit risk, market volatility, interest rate changes, and liquidity issues. But risk management doesn't stop there. Regulatory risks are also huge, particularly in highly regulated industries like banking, healthcare, or energy. Staying ahead of these potential pitfalls will help you protect your clients and their investments. Understanding accounting standards is a must. Whether you're working with IFRS standards, International Financial Reporting Standards, or US GAAP, you need to know how to interpret and compare financial reports across different jurisdictions. This is especially important when working on cross-border deals or advising multinational clients. Accounting rules can vary significantly, so being fluent in these standards ensures that you're presenting accurate and compliant financial advice. Next up is regulatory knowledge. As you progress in your career, it becomes increasingly important to be familiar with the rules governing financial markets. In the US, this means understanding SEC regulations and the Securities Act, while in the UK, it's about being up to speed with the FCA's rules under the Financial Services and Markets Act. These regulations affect everything from capital raising and M&A to securities trading. Not only do you need to ensure that your clients are compliant, but you also need to be aware of how regulatory changes could impact their business strategies. Lastly, let's touch on behavioral finance. While traditional finance assumes that markets are rational, behavioral finance recognizes that human psychology plays a big role in financial decision-making. As a senior banker, you need to understand how cognitive biases, like overconfidence or loss aversion, can affect both your clients and the broader market. This insight can be especially helpful when advising clients on investment strategies or navigating volatile market conditions. So that's a look at the key knowledge areas for senior investment bankers. Mastering macro and microeconomics, industry-specific insights, risk management, accounting standards, regulatory frameworks, and behavioral finance will give you a well-rounded understanding of the landscape you operate in. This knowledge will help you guide your clients more effectively and anticipate challenges before they arise. In the next section, we're going to dive into mathematical skills, those skills you'll need to master to be, yes, a successful investment banker. Are you ready? Okay, let's press on. Okay, here we go then. Mathematical skills. We're going to dive deeper into the mathematical skills you need to master if you're going to be a successful investment banker. Now, while you don't have to be a mathematician, having a strong command of finance-related mathematics is crucial to making informed decisions, valuing companies, and advising clients effectively. These skills go beyond simple arithmetic. So let's break down the essential areas of mathematical expertise. First, let's talk about statistics and probability. These skills are fundamental in risk management, portfolio analysis, and even decision making. You'll often need to assess the likelihood of certain outcomes, such as the probability of a company defaulting on its debt, or the potential impact of market events on an investment. Statistical analysis can help you identify patterns, trends, and correlations in financial data, which can then inform your recommendations to clients. Think of probability in terms of what-if scenarios, especially when you're stress testing financial models under different market conditions. Next up is calculus and algebra. These aren't just for the classroom. They play a crucial role in some of the more complex models you'll use as a banker. For instance, calculus is essential in discounted cash flow analysis, especially when you're looking at continuous cash flows over time. It's also a key part of option pricing models like Black-Scholes, where derivatives are used to calculate fair value. Algebra comes into play for a variety of financial formulas, including those for interest rates, bond pricing and loan amortization. While you won't be solving equations every day, understanding the mechanics behind these formulas will help you explain them to clients and make more precise financial decisions. Quantitative modelling is another important skill set. This involves using statistical methods and mathematical models to predict market behaviour, assess risk and optimise portfolios. Regression analysis, for example, is a powerful tool for identifying relationships between variables, like how interest rates impact stock prices. You'll also use Monte Carlo simulations to forecast different scenarios, particularly in stress testing and sensitivity analysis. These models help you simulate a wide range of outcomes, giving you a clearer picture of potential risks and rewards. Now let's move on to corporate finance math. This is the bread and butter of investment banking. Concepts like the time value of money, the weighted average cost of capital, and the capital asset pricing model are critical. The time value of money, or TVM, helps you understand the future value of money, an essential part of valuation when considering future cash flows. The weighted average cost of capital, or WACC, gives you the blended cost of a company's capital, whether it's debt or equity, and is crucial for assessing the viability of an investment project. CAPM, the capital asset pricing model, is another core tool, helping you calculate the expected return on investment by factoring in market risk. These calculations form the basis of financial models and investment strategies. Stochastic modelling may sound complicated, but it's incredibly valuable for pricing options and other derivatives. It involves predicting future outcomes that are inherently random or uncertain, which is common in financial markets. For example, if you're working with options, you'll use stochastic processes to estimate how the underlying asset price will fluctuate over time. This allows you to price options more accurately and hedge risks in your portfolio. Understanding stochastic modelling will also give you insights into volatility and market uncertainty, two key factors in investment decision-making. So those are the key mathematical skills you'll need as a senior investment banker. From statistical analysis and quantitative modelling to corporate finance math and stochastic processes. These tools will allow you to build more sophisticated models, assess risk more effectively, and advise your clients with greater precision. In the next section, we're going to look at legal knowledge, an often overlooked but essential area for any senior investment banker. You still with me? Great. If you need to, pause and get another coffee, and I'll see you in the next section. Right then, on we go. Legal knowledge. In this section, we'll be covering one of the most critical but often overlooked areas for senior investment bankers, legal knowledge. It's no coincidence that a lot of people come into investment banking from the law as well as accountancy, so this is not an area to be overlooked. Whether you're working on M&A deals, capital raises, or navigating complex financial regulations, a solid understanding of the legal landscape is crucial. This knowledge will help you mitigate risks, ensure compliance, and structure deals effectively. Let's break down the essential legal areas that you'll need to master. First, let's talk about securities law. As a senior banker, you'll often be involved in issuing and trading securities, whether it's through IPOs, bond issuances, or secondary market activity. You'll need to be fluent in the relevant laws that govern those transactions. For example, in the United States, you'll need to understand the Securities Act of 1933, which regulates the issuance of new securities, and the Securities Exchange Act of 1934, which governs secondary trading and market activities. In the UK, you'll need to be familiar with the rules set by the Financial Conduct Authority and the framework established by the Financial Services and Markets Act. These laws are designed to protect investors, promote transparency, and maintain market integrity. Staying compliant with these regulations is not optional. It's mandatory both for you and your clients. Next up is M&A law. If you're advising on mergers and acquisitions, you need to know the legal framework that governs these transactions. This includes the entire process, from due diligence and contract negotiation to regulatory approvals and merger control. A big part of your role is ensuring that your clients' interests are protected through watertight contracts. You'll need to understand key terms like representations and warranties, indemnities, and non-compete clauses. That's why I put sections of these in my Udemy courses, particularly my course on M&A. Additionally, you need to be aware of antitrust regulations, particularly in larger transactions that could raise concerns about market competition. For instance, in the EU, you'd need to factor in merger control regulations, ensuring that the deal does not violate competition laws. Let's move on to contract law, which underpins most of your deal-making activities. Every transaction you work on will involve complex contracts, and while lawyers will handle the drafting, it's essential that you, as a senior investment banker, understand the key contractual terms. Clauses around representations, warranties, indemnities, and covenants can have major financial implications, so being able to interpret these terms is critical. For example, representations and warranties ensure that both parties are truthful about the state of their businesses, while indemnities protect against potential liabilities that might arise after the deal is completed. Understanding the financial impact of these terms is crucial when structuring deals and managing risks, because you're going to have to negotiate these. Regulatory compliance is another area that demands attention. Investment banks are highly regulated entities, and as a senior banker, you'll need to be aware of the rules that govern both your firm and your clients. This includes anti-money laundering, knowing your customer regulations, and rules around data protection and privacy. Regulatory breaches can lead to hefty fines and reputational damage, so it's vital to ensure that you and your team are compliant at all times. Whether you're advising clients on a cross-border deal or dealing with new financial products, staying within the regulatory framework is critical to protecting your firm and your clients, as well as yourself. M&A deals often carry significant litigation risks. Post-transaction disputes can arise over issues like breach of contract, shareholder lawsuits, or discrepancies uncovered during due diligence. As a senior banker, it's your job to mitigate these risks by ensuring that all terms of the agreement are clear, enforceable, and legally sound. You also need to be aware of potential liabilities such as environmental, employment, or intellectual property issues, which can derail a deal even after it's been completed. Keeping the legal landscape in mind will help you advise your clients on structuring deals in a way that reduces the likelihood of future disputes. In today's globalized market, many of the deals you work on will span multiple jurisdictions. This means you'll need to be aware of different legal systems and how they interact. For instance, if you're advising on a cross-border M&A deal, you'll need to consider the local corporate governance laws, securities regulations, and tax laws in each country involved. You don't need to be an expert in every jurisdiction, but having a working knowledge and knowing when to consult local legal experts is key. Being aware of international treaties, trade agreements, and sanctions can also impact the way deals are structured and close. So that wraps up the key legal knowledge areas for senior bankers. Mastering securities law, M&A law, contract law, and regulatory compliance is essential to successfully navigating the legal complexities of deals and transactions. Keeping yourself informed about global legal frameworks will give you the edge when working on cross-border transactions. In the next section, we'll be covering financial modelling skills, a critical area where your technical expertise meets practical deal-making. So, take a deep breath and keep going. You're doing really well, and I hope you're finding this really valuable. Now we come to modelling skills. We'll be discussing one of the most essential technical areas for any investment banker: financial modelling. Whether you're working on valuations, M&A or capital raising, financial models are the backbone of your decision making. As a senior investment banker, your models need to be not only accurate, but also dynamic and easy to understand. Let's break down the key types of modelling skills you're going to need to master. First up, we have DCF modelling, discounted cash flow. These models are one of the most commonly used valuation models, and they're crucial for assessing the intrinsic value of a company. In a DCF model, you forecast a company's future cash flows and then discount them back to the present value using a discount rate that reflects the risk. But the real skill lies in making your model flexible enough to test different scenarios. Can the business still generate value under pessimistic assumptions? What happens if interest rates rise? Building a robust DCF model means incorporating sensitivity analysis, where you can tweak key inputs like growth rates, margins or discount rates, and see how they affect the valuation. This helps clients understand the full range of outcomes. Next, let's talk about LBO models. Leverage buyouts are a popular tool in private equity, and as a senior banker, you'll need to be able to build detailed LBO models. I've got a 25-hour LBO course on Udemy, which you definitely want to check out if this is an area that's new to you. These models help you to determine whether acquiring a company using mostly debt will generate a good return for investors. In an LBO model, you'll focus heavily on debt structure, interest payments, and repayment schedules. It's about leveraging as much debt as possible while still ensuring that the company can meet its obligations without defaulting. You'll also need to calculate the internal rate of return and cash-on-cash multiple to see if the deal makes sense from an investor's perspective. This type of modelling is a blend of finance and engineering, finding the optimal balance between risk and reward. Now let's move on to M&A modelling. This type of modelling is at the heart of mergers and acquisitions work. Your role here is to assess whether a merger or acquisition will be accretive or dilutive to the acquiring company's earnings per share, EPS. Accretion means that the deal will increase the acquirer's EPS, while dilution means it will decrease. You'll also model synergies, essentially the cost savings or revenue increases that come from combining the two companies. But synergies aren't always guaranteed, and that's why you'll need to run different scenarios to see how various assumptions, like integration costs or future revenue growth, will affect the outcome. The ability to clearly present these findings to clients can be the difference between a deal going through or being shelved. Scenario and sensitivity analysis is another key modelling skill. It's not enough just to build a model. You'll need to stress test it to account for various market conditions and risk factors. For example, you can create best case, worst case, and base case scenarios to understand how your model reacts to different inputs like changes in revenues, costs, or interest rates. Sensitivity analysis drills down even further, allowing you to isolate a single variable, like discount rates or tax rates, to see how sensitive the final valuation is to that variable. This gives your client a better understanding of the risks involved and can help them prepare for unexpected market shifts. Another core skill is three-statement modelling, where you integrate the income statement, balance sheet, and cash flow statement into one cohesive model without circularity. This allows you to see how changes in one area of the business affect the others. For example, if you adjust the revenue in the income statement, it will affect your cash flow, which then impacts the balance sheet in terms of cash reserves and working capital. This model is particularly useful for budgeting, forecasting, and understanding the overall financial health of a company. It also gives you real-time a snapshot of the company's liquidity, solvency, and cash-generating ability, vital for assessing any potential investment or acquisition. Now, flexibility is key when building any model. As a senior banker, your models need to be dynamic enough to accommodate new information or changing assumptions without breaking. This means using Excel techniques like data validation, advanced formulas, and sometimes even macros or VBA to make your models more friendly. When you're working on large deals, there is no time to go back and rework a model from scratch every time the number changes. Building flexibility into your models ensures that they can handle the inevitable tweaks and updates that come with any transaction. Finally, let's talk about presentation-ready models. As much as the numbers matter, how you present those numbers is equally important. Senior bankers need to make sure that their models are easy to follow, visually clear, and logically structured. A clean and well-organized model allows clients or colleagues to understand the key drivers of the deal at a glance. Think about it this way: your model is a tool, and it is only as useful as its ability to communicate the story behind the numbers. Make sure everything is labelled clearly, use consistent formatting, and include summary sections that highlight the most important insights. So, those are the key modelling skills that every senior investment banker needs to master. From building DCF and LBO models to running sensitivity analyses and creating flexible presentation-ready models. These are the skills at the heart of what you do or what you will do. Accurate, dynamic financial models allow you to provide solid advice and make informed decisions, whether you're advising clients, pitching deals, or closing transactions. In the next section, we're going to cover strategy skills, which help senior bankers align financial advice with long-term business goals. If you've got this far, 10 out of 10 for persistence, a very important investment banking skill. Just 2 more sections to go, and then I'll share with you the bonus section, which I guarantee you will not want to miss. The next topic up then is strategy skills. We're going to discuss the strategy skills every senior investment banker needs to master. At this level, your job isn't just about analysing numbers or executing deals. It's about advising clients on long-term business strategies that drive growth, manage risk, and create value. You'll need to think like both a banker and a strategist. Let's break down the key strategic skills you should focus on. First of all, let's talk about strategic advisory. As a senior investment banker, clients expect more than just financial analysis. They're looking to you for guidance on how to grow their business and create long-term value. You'll be advising on things like market entry, geographic expansion, diversification, and sometimes even exit strategies. It's important to align your financial advice with the client's overall strategic goals. For instance, if a company is looking to expand into a new market, your role is to evaluate potential acquisitions or partnerships, assess capital needs, and ensure the timing is right based on market conditions. You're not just a deal maker, you are a trusted advisor. Next, let's cover market positioning and competitive analysis. Part of your strategic role is to help clients understand where they stand in the market and how they can position themselves for growth. This might involve identifying competitive advantages or analysing competitors' weaknesses. You'll need to keep a close eye on industry trends and emerging technologies that could disrupt the market or create new opportunities. This is where your deep industry knowledge comes into play. Whether it's advising a tech company on how to capitalise on innovation or guiding a healthcare firm through regulatory changes, you'll be expected to offer insights that go beyond purely financial data. Capital structure optimization is another critical skill. Clients often look to you for advice on how to finance their growth, whether it's through debt, equity, or a combination of both. You'll need to understand the trade-offs between different financing options and recommend the optimal capital structure for your client. For example, taking on too much debt can put a strain on cash flow, but raising too much equity can dilute shareholder value. The goal is to balance risk and reward, ensuring that the company has enough financial flexibility to grow while keeping its cost of capital as low as possible. As a senior banker, you'll also need to keep an eye on broader market conditions, such as interest rates and investor sentiment, which can affect the attractiveness of different financing options. Moving on to M&A strategy. Mergers and acquisitions are one of the most impactful ways a company can grow or restructure. And as a senior banker, your role is to guide clients through these transformative deals. M&A isn't just about putting two companies together, it's about finding the right fit. You'll need to help clients identify potential acquisition targets or divestment opportunities, evaluate synergies, and assess whether a deal will create or destroy shareholder value. Timing is also crucial. Markets are consistently changing, and knowing when to strike is often the difference between a successful deal and a missed opportunity. A strong M&A strategy considers not just the immediate financial gains, but how the deal fits into the company's long-term goals. Let's talk now about corporate restructuring and turnaround strategies. Not every client will be in a growth phase. Some will be dealing with financial distress, operational inefficiencies, or declining market share. In these cases, you'll need to develop restructuring plans that allow the company to recover and become profitable again. This might involve advising on cost-cutting measures, asset sales, refinancing debt, or even exploring bankruptcy protection in extreme cases. Turnaround strategy requires a delicate balance. On the one hand, you need to act quickly to stabilize the company, but on the other, you need to take a long-term view to ensure the company can rebuild and thrive in the future. As a senior banker, your advice can mean the difference between a company's recovery or its failure. At the core of all these strategies is one key goal: long-term value creation. Whether it's through organic growth, acquisitions, or restructuring, your focus should always be on helping clients create sustainable, long-term value for their shareholders. This means thinking beyond immediate financial results and considering the broader impact of your recommendations. For example, how will a client's capital structure hold up during a recession? Will a particular acquisition strengthen their competitive position over the next decade? Does their business strategy align with emerging trends like digital transformation or sustainability? Senior bankers who can think long-term and align their strategies with clients' broader goals will always be in high demand. That wraps up the strategic skills every senior investment banker needs to master. From advising on growth strategies to optimizing capital structures and navigating M&A or restructuring, strategy is about thinking holistically. Your role is to help clients not just execute deals, but to achieve their long-term business objectives and create lasting value. In the final section, before the much-awaited bonus section, we'll discuss the skills you learn in an MBA and how they tie into the work of a senior banker. Ready to go on? Great. Let's press on one more section and then I'll reveal the big bonus, which I know is going to be very, very significant to your long-term thinking. Hey, congratulations for getting this far. Now we're going to discuss the key skills you typically gain from an MBA and how they directly apply to your role as a senior investment banker. Now, I think this is a really important section, and I know that because I have an MBA with distinction from Bayes Business School in London, and it taught me a huge amount, which I find even today extremely valuable. So I'm very, very excited to share this particular section with you. While technical skills and deal making are essential, The broader business perspective you develop during an MBA helps you navigate complex business challenges, lead teams, and think strategically. Let's go through the MBA skills that are particularly valuable in senior banking roles. First, let's talk about leadership and organizational behavior. In an MBA, you learn about different leadership styles, team dynamics, and how to manage change within an organization. As a senior banker, you'll often be managing cross-functional teams and advising senior executives. You'll need to understand what drives people, how to motivate them, and how to build cohesive teams that work efficiently under pressure. Equally important is change management, especially in mergers or restructuring situations, where organizational upheaval is common. Your ability to lead and manage change smoothly can make a huge difference in the success of a deal or project. Next, we have corporate governance and ethics. MBA programs emphasize the importance of strong governance practices and ethical decision-making, topics that are highly relevant in banking. As a senior banker, you'll often be advising clients on governance issues such as how to structure their boards or manage shareholder relations. You'll need to understand the frameworks that guide good corporate governance, from ensuring transparency to aligning executive incentives with company performance. Ethics also play a critical role in maintaining trust, both with your clients and within your firm. In an industry where reputational risk is significant, strong ethical foundations help you navigate complex, often grey areas of decision-making with confidence. Strategic management is another core component of an MBA that directly applies to investment banking. At this level, you're not just executing deals. You're thinking about how those deals fit into a company's overall strategy. You'll need to understand how different aspects of a business interact, from operations to marketing to finance, and how strategic decisions will impact the company in the long run. Whether you're advising a client on entering a new market, acquiring a competitor, or restructuring their business, the strategic frameworks you learn in an MBA will help you see the bigger picture and provide more insightful advice. Now, in my MBA to Business Plan course on Udemy, you'll find a lot of these business models and frameworks that you can very quickly pick up and understand. So definitely check that out. Next up, global business and geopolitical awareness are also critical in today's interconnected world. An MBA typically exposes you to global case studies and teaches you how to think about business in an international context. As a senior banker, this skill is invaluable, particularly if you're advising clients with global operations or working on cross-border deals, as I did. You need to understand not only the financial and operational aspects of a deal, but also how to think like geopolitical risks, currency fluctuations, and trade agreements could impact your client's strategy. This global mindset enables you to offer more comprehensive advice and better anticipate challenges that might arise from doing business in different regions. Now let's talk about operations management. In an MBA, you gain insights into how businesses run their day-to-day operations and how those operations can be optimized for efficiency and cost saving. As an investment banker, you might not be directly involved in managing operations, but understanding how businesses operate helps you evaluate them more effectively. When you're advising on a potential acquisition or investment, knowing how to assess a company's operational efficiency, supply chain risks, or scalability is crucial. It allows you to dig deeper into whether a company's operations are set up for long-term success or if they need restructuring. Negotiation is another key area covered in most MBA programs, and it's highly applicable to investment banking. Whether you're negotiating a deal with another bank, structuring a client's financing terms, or working through the details of an M&A transaction, negotiation skills are essential. In an MBA, you learn frameworks for understanding the psychology of negotiation, how to create win-win situations, and when to walk away from the table. This knowledge will help you not only close deals, but also ensure that both sides feel they've achieved their goals, which is critical for maintaining long-term relationships in the industry. Lastly, financial acumen is, of course, a central focus of any MBA program. While you already have a strong foundation in finance as a senior banker, an MBA helps you refine your decision-making skills by integrating finance with broader business considerations. This means thinking about how financial decisions impact all aspects of a business, its strategy, operations, and people. You'll also gain experience in making decisions under uncertainty, evaluating trade-offs, and using financial data to guide strategic choices. These skills are invaluable when you're advising clients on complex transactions or investment opportunities. So, those are the key MBA skills that directly translate to a senior investment banking role. From leadership and corporate governance to global business awareness and negotiation theory, an MBA gives you the frameworks to think more strategically and holistically about your clients' needs. It's not just about the numbers. It's about understanding how businesses operate, grow and succeed in a complex and interconnected world. Right, next up is the bonus section that I promised you. Well done for getting this far, and I know you're going to find this worthwhile. What are we going to cover? Personal career management skills, where we'll discuss how to manage your own career trajectory while leading a successful team. Now, this is a totally overlooked area, and I guarantee you need to watch this. From experience, I can also guarantee that your boss is much more interested in his own bonus than your career development. So it's all down to you. Sharpen your pencil and let's press on. Go then. Personal career management. In this bonus section, we'll be discussing personal career management, how to navigate your career in investment banking from trainee all the way to senior director. Managing your career effectively in such a demanding industry requires more than just technical skills. It's about building relationships, strategic networking, continuous learning, and positioning yourself for leadership. Let's break down the key areas you should focus on to manage and develop your career successfully. Firstly, let's talk about continuous learning. The financial markets evolve constantly, so it's crucial that you stay ahead of industry trends, regulations, and new technologies. Early in your career, focus on building a solid technical foundation, mastering financial modelling, valuation techniques, and deal execution. But even as you progress, learning never stops. Whether it's pursuing further qualifications like a CFA or keeping up with emerging areas like fintech and ESG, environmental, social and governance. Investing in continuous learning ensures that you remain relevant and adaptable in a rapidly changing environment. Whilst I was working at Hoare Govett back in the very early 90s, I did my MBA at night school over 2 years. It was that important to me to get that qualification. Networking is essential at every stage of your career. As a trainee, start by building relationships within your firm. Find mentors who can guide you and peers who will grow alongside you. Don't forget they're the leaders of the future. As you move up the ranks, expand your network beyond the firm to include clients, industry experts, and colleagues from other banks. Networking is not just about who you know, it's about maintaining relationships that could open doors to new opportunities, deals and partnerships down the line, not to mention jobs. Regularly attending industry events, conferences and maintaining a presence in relevant forums will help you stay connected. Reputation is everything in investment banking. From early on, strive to build a reputation for reliability, integrity and excellence in execution. As you take on more responsibility, client relationships become critical. Cultivating long-term relationships with CEOs, CFOs and board members is what separates senior bankers from the rest. By consistently delivering value and staying in touch with client needs, you'll build trust and secure repeat business. Remember, becoming a trusted advisor to clients takes time, but it's one of the most important assets you'll have as a senior director. Managing your internal relationships is just as important as external ones. In investment banking, upward management, how you manage your relationship with your boss and senior leadership, is crucial. Keep your boss informed on your progress, be proactive in solving problems, and understand their objectives so that you can help them succeed too. In the later stages of your career, you'll also need to engage with the remuneration committee and other senior stakeholders. The key is positioning yourself as a valuable asset to the firm, using data-driven achievements like deal volume and revenue generated to justify promotions and compensation discussions. Timing is everything when it comes to career progression. From associate to director and beyond, knowing when and how to position yourself for promotion is crucial. Early on, focus on delivering results consistently and building a track record of success. As you approach senior roles, make sure you're vocal about your ambitions and what you can bring to the leadership table. Promotions in banking are often as much about perception as performance, so ensure that you are seen as someone who not only closes deals, but also leads teams and drives strategy. And don't forget that the best promotion might also be at another firm rather than the one you're in. Finally, managing your career means managing yourself. Investment banking is notorious for long hours and high stress, so developing resilience and finding some level of work-life integration is important for longevity in the industry. Early on, you may need to put in extra hours to prove yourself, including all-nighters, but as you rise through the ranks, learning how to delegate, prioritize, and take time to recharge will prevent burnout. Remember, a long and successful career is a marathon, not a sprint. So managing your career from trainee to senior director requires continuous learning, networking, and building strong client and internal relationships. By positioning yourself as a trusted advisor, managing upwards, and limiting your career moves strategically, you'll set yourself on the path to success. At this stage, you must have lots of questions, so put them in the comments and I will try to help you with them. I've occasionally referenced my financial Udemy courses, and I'll leave links to the most relevant ones in the description below. If this has been helpful, then please subscribe to my We Have to Talk About Finance channel to make sure that you keep up to date with all my finance content. The next video you'll want to watch is where I discuss the process of an M&A transaction, which is one of my most watched videos, and I will link to it here on the screen. I hope this was valuable to you. I've enjoyed making it, and it's been a great exercise for me to think strategically and structurally through my own investment banking career to help me help you with yours. And I look forward to seeing you very soon in another one of my finance videos. Thank you for watching.